Welcome to The Explainer. Today, we're diving into the unbelievable tension that's gripping the world's food and energy markets. Seriously, from American farms all the way to Malaysian ports, the whole system feels like it's holding its breath, just waiting for a sign.
And this quote from a market analyst, man, it just cuts right through all the noise. It gets to the heart of a really stark economic reality that you just don't see when you're driving down the highway. So while the harvest might look big and beautiful, the balance sheets for American farmers, they are telling a very, very different story.
And if you look at the USDA's own data, you see this crazy contrast. On one hand, the money coming in from crops is actually falling. At the same time, production expenses, for things like fertilizer, seed, fuel, are at an all-time high. So you're probably asking, how is that gap being filled? Well, that third bar tells the story. Direct government payments are projected to explode by 300% this year, to a jaw-dropping $40.5 billion. It's a really dire picture being propped up by a massive flood of federal cash. So all this intense economic pressure on farmers, it's happening at the same time as this huge debate. And the big question everyone's trying to answer is this: just how big is this year's U.S. crop really? And believe me, the answer you get totally depends on who you ask. Okay, so this slide breaks it down perfectly. You've got two totally different stories playing out. On one side, there's the official government line from the USDA. They're still pointing to a potential record breaker. But on the other side, you've got analysts and farmers, the folks with boots on the ground, and they're seeing some serious problems. We're talking widespread crop disease, the very real risk of an early frost up north, and a historically dry finish to the season. So just how bad has this dry spell been? Well, one analyst put it this way, and I love this. We're not just talking about dry, we're talking about elite dryness. The end of the growing season has been the second driest in 50 years for huge parts of the Corn Belt. This isn't just a minor dry spell, folks. This is what's known as a yield killer, and it's happening at the absolute worst possible time for the crop.
But here's the kicker. A smaller than expected supply might not even be the biggest issue here. No, there's a giant question mark hanging over the other side of the equation: demand. And it pretty much all comes down to one country.
And that problem can be summed up with one single powerful number: 0. As of right now, China, the #1 importer of soybeans on the planet, has not bought a single bushel of new crop U.S. soybeans for this marketing year. That is just not normal. And it leaves this gaping hole in the U.S. demand picture that is almost impossible to fill.
And that really puts this whole yield debate into perspective, doesn't it? Like one strategist said, if we're not going to have any export business to China, well, it doesn't matter. I mean, you can argue all day long about how big the crop is, but if your #1 customer just doesn't show up to the party, a slightly smaller supply means very little when you're facing a catastrophic drop in demand.
Okay, let's shift gears for a minute. We're going to move from the grain fields to the livestock sector, which has, honestly, been the one bright spot in an otherwise pretty gloomy farm economy. But even in this one bright spot, there's a whole different kind of tension building, and it has traders wondering if a truly historic run is finally about to end.
So, the cattle market has been in what traders call a parabolic move. What's that? Think of a rocket ship. It's when a price chart goes almost straight up, just this nearly vertical price spike. And it's been driven by a real shortage of animals and really strong consumer demand, which has just sent prices higher and higher and higher.
And that's the thing about rocket ships, right? They eventually have to come back down, which leads everyone in the market to ask the exact same question. I mean, these kinds of moves are, by their very definition, unsustainable. They just can't last forever. The laws of market gravity eventually kick in. The only question is, when?
So, traders are now absolutely glued to their charts, looking for any sign at all that this incredible momentum is finally running out of gas. And what they're starting to see is this classic technical pattern called a rounded top. It's like a hill, right? The climb up was steep, but now it's starting to curve over at the peak. Now, it doesn't guarantee the rally's over, but it's a huge signal that the relentless upward pressure might have finally fizzled out, and a big correction could be on its way.
So let's just zoom out for a second. We've got a U.S. farm sector in recession, a big fight over crop size, China is missing in action, and the cattle market might be on a cliff's edge. But you have to understand, none of this is happening in a bubble. These are all threads in a much larger, interconnected global story, a story of potential oversupply.
Take wheat, for example. Global prices, they're scraping the bottom of the barrel, hovering near 5-year lows. And why is that? It's pretty simple, actually. The market is being weighed down by absolutely massive crops coming out of Russia. They're just flooding the global market and putting a lid on prices everywhere else.
All right, now let's jump over to edible oils. It's the same story, just a different product. In Malaysia, a huge producer of palm oil, inventories are expected to rise for the 6th month in a row. To put it simply, they're making more oil than they can sell, so their stockpiles are just building and building, which, you guessed it, pushes prices down.
And you know what? It's not just food, it's energy too. Big agencies like the International Energy Agency are now forecasting a pretty substantial global surplus of crude oil. We're talking as much as 2.5 million barrels per day by late next year. That is a huge shift, and it points toward a future with plenty of supply and potentially lower energy costs.
Okay, so let's pull all these different threads together. You've got all these head-to-head conflicts, right? A farm recession clashing with record government payouts. Official forecasts of a record crop clashing with reports of elite dryness on the ground. You have the problem of a smaller crop clashing with the even bigger problem of a missing China. And all of these domestic tensions are playing out against this global backdrop of potential oversupply. It's all bringing the markets to this critical moment of truth.
So, what happens now? Where do we go from here? Well, the market is basically just waiting for a verdict. And that verdict is going to come from a series of really crucial data releases. The USDA's big report will give us a new yield forecast, weekly export sales data will finally tell us if China is buying anything, and, most importantly, the real-time results from the combines as harvest kicks off, well, that's where the rubber meets the road. These reports are going to answer a lot of the questions we've talked about and will likely set the direction for months to come.
So the whole system, it really is just balanced on a knife's edge. This dominant story we've been hearing for years about scarcity and inflation could be about to flip on its head and become a story about surplus and deflation. And that leaves us with one final huge question. At this critical tipping point for the global food economy, which way is it going to fall?